decided to go to Singapore a few days ago because honestly I've been feeling like a little bit of a rut, you know, in Jakarta. And that's the beauty about the job, I guess. You can go fly to anywhere you want really, but obviously I don't want to go too far. Singapore, Bangkok was another option, but I think Singapore is like my comfort zone. Don't think I'm gonna buy a book this time around because I did bring one that I really wanted to finish, which is this right here. It's inside my bag and we're gonna finish this. This is not premium economy, what the f. That's crazy. I love it. Woo. Golly. Damn, this is a really nice place, man. Edition first timer, but I've always wanted to try this hotel out and the whole series they have around the world. Apparently there's 12 different locations and we got the garden view, baby. Yeah. Apparently, it's the best view they have in this hotel specifically. And wishes of prosperity, which is just in time because I literally just entered a trade on CAD yen. See how it's doing? It's alright. It's alright. Literally, still at break even. That's the garden view outside. Damn! I'm gonna show you guys a little tour of the hotel, the lobby, all the amenities in a bit. But before that, I know y'all came here for some trading value, so let's do that. All right, so let's start talking about our CAD yen position here. Starting on the weekly, as usual, we know that we are in a macro uptrend because price has contacted macro support right here, and it has since made this beautiful uptrend move. So we know that the weekly bias is indeed the longs. However, we know that weekly biases are more of a bird's eye view perspective. They're not the most relevant thing. And so we don't want to use that as the only reason we look for longs, right? It's just like supplemental information. Think of it that way. So we want to look for more relevant things. And what that is the prior weekly close. How did that candle close last week? Beautiful, right? That is an ideal bullish engulfing close. So that adds relevance to our bird's eye view long bias. So now we have a clear weekly picture. We can move into the daily chart. And on the daily, we find this point of liquidity serving as our resistance level. And price is currently attempting the breakout. Now, the trade that I just took here is a slightly higher risk trade. And the reason for that is because this could still be a liquidity capture. And in fact, my strategy loves looking for liquidity captures where price breaks out of a value area and then instantly shifts momentum to the downside, like so, right? So why am I taking this trade if I know that that's usually what I'm looking for? The reason is because price broke out and followed up with a deliberate continuation structure. That makes this a good enough long attempt, right? It may not be perfect, but it is at least good enough for a smaller risk size trade, meaning I don't risk as much money on this one, right? As I do with my more textbook trades. And so how do we see this deliberate continuation structure? So on the H4, what do we see? We see a high quality origin impulse up to break out of our value area. A high quality origin impulse is always necessary. That's step one to finding a potential trade opportunity. And then we want to see that high quality origin impulse followed up by a nice continuation structure that we see on the 1 hour right here, right? And so this is our continuation structure, as you can see right there, right? We find our MTI here. 1, 2, and 3. All right. And so this is a nice candidate for a higher risk trade because we do have a legitimate structure here. And once we refine it on the 15-minute, forgive me for my structures not being as clean this time, guys. I did not bring my mouse. And this laptop, the Lenovo Yoga, it's nice and everything, but the trackpad is fucked, man. Like, I don't know if it's just my laptop and I got a broken one, or if it's just like this, because it's really bad. It's really, really bad. So the final thing is how beautiful our bounce candle is here, right? That is a wonderful, ideal bounce on the 15-minute, a bullish engulfing close to indicate that yes, we are now ready to take our long positions. So at this point, we just see how this trade plays out. And if this does not play out well, then I'm done taking higher risk trades for the rest of the month. Currently, it's July 16. And so far, I have not taken any higher risk trades in this month, right? And so that brings me to the final point that I want to talk about here. You have to be aware of the quality of trades that you're taking. I'm not saying that you have to be perfect, because none of us can achieve perfection. So from time to time, it's natural for you to take slightly higher risk trades, right? Because the market's not always going to give you the cleanest opportunities week in, week out. That's just how it is. That's how this game works, right? There's no such thing as perfection here. So from time to time, you will have more messy or higher risk opportunities like this for the reasons I've explained just now. That's okay, as long as your ratio is proper, right? What do I mean by that? Usually, I only take 1 or 2 higher risk trades a month. Keep it simple. That's it, right? And if I have a nice buffer, like let's say I've been doing well for the past month or the past quarter, then I'll bump that number up to 2 higher risk trades a month. That's my ratio. It's my allocation, right? But if I'm not doing so well, I might just put it to 1 higher risk trade a month, or I might even go 0 if I have some issues with my confidence, if I'm not like performing at my peak level, then I'll just cut it down to 0 and stick to my textbook trades, build my confidence back up from there. Slow and steady wins the race. And guys, confidence is a very, very, very important thing in trading. It actually does impact the way that you interpret markets, the way that you make decisions. You will make better decisions when you're confident. And if you're not, things just feel a lot heavier, right? Things are just more difficult. And so for that reason, you want to keep confidence front of mind whenever you're doing anything in trading. Just remember, confidence is like a currency, right? It's important for you to perform well. So try to conserve your confidence. Preserve it as much as you can. Now, time for the hotel tour. Let's just leave this be and we'll go for it. Yeesh. Gotta wait till the weekend. We're still trading. Hello, sir. Shit, I might get a drink or two, man. Just being honest. Well, shit. We are taken out for the clean L. That was a fair attempt at a higher risk trade. And that taps me out for the rest of the month. Today is July 16. And so for the next 2 weeks, I will be done with higher risk trades. And we'll go back to textbook setups, light work. And also, I keep running into this fucking guy in Singapore, man.
In economy, you can drink?
It's always accidental. We never plan it, but it always happens. Well, that's not true. This is only the second time. But it's the second time in like 6 months. Or am I just being dramatic? Just got home to the nicest gift. Damn. Got a nice bottle here. Got a tote bag. Pouch. Let me see what this is all about. Okay. Damn! They embroidered it! My initials! I actually feel kind of good getting this. Damn. Hospitality at its finest. Nice addition. Good job. Very nice job. Did they embroider my bottle too? If they did, I'm just gonna extend here. I'm not even gonna go home. No embroidery, but a really cool black bottle right here. Damn. I'll take it. Nice. All right, so right now we have two really interesting opportunities that we're gonna break down. The first of which is CAD yen again, but this time we are going for the textbook play that I referred to earlier, right? So what does that look like? Well, we know that we have this point of liquidity serving as our resistance level on the daily chart, and price is currently capturing liquidity from that value area. So simply put, we are looking for price to break back down into range like so, create our first continuation structure once it breaks down into range, and then we're trading that follow through move. So our entry will look something along these lines. This is the kind of trade that we're looking for in CAD yen tonight. Ooh, that's my room service. One sec.
Ada yang makan mau dikeluarkan kah?
Iya, dikeluarkan.
Terima kasih ya.
Terima kasih ya, Pak.
Kembali bersoalan.
Always have to try room service when you're in a hotel, you know what I mean? But anyways, this is the trade that we're looking for later because PPI is about to print soon, the news event, so obviously we're not going to trade right into that. So we're just going to wait for the volatility to die down from that news event, and then we'll see what the market develops. So aside from CAD yen, we do have a better option. It's also a yen short, but let me explain why it's better, right? So this will be dollar yen. And the reason it's better is simply because we have a better value area here. This is not a point of liquidity. This is key resistance. And let me explain what the difference is. A point of liquidity is when it's a part of an overall downside wave like this. So this is the origin impulse. This is the correction. This is the follow through. It's still a value area, but it's called a point of liquidity, right? Still pretty good, but it's not as good as a key resistance level like this one. What makes this a key resistance level? For one, it is not a part of any move whatsoever, right? This came from an entirely unique move on its own. This is a legitimate uptrend within dollar yen. This actually ended the downtrend here, right? This is an entirely new move in and of itself. So that makes it a key resistance level right there. And even more than that, in dollar yen, we actually have this beautiful ascending channel reversal structure, as you can see here. Now, you might have noticed that we never completed MTI here, right? But that's okay, because when we're dealing with larger structures, like on the daily, they're not as accurate as compared to structures on the H1 or on the 15-minute, which is why oftentimes you will notice that with entry criteria, holy shit, my alerts are just sounding everywhere, guys. PPI just printed, so we're probably gonna trade this soon. But back to my point, smaller structures, when we're talking about H1 structures, 15-minute structures, those need to be clear. Price needs to complete the structure properly in order to activate our entry. Whereas when we're dealing with higher time frame structures, they're just naturally less accurate. And that's why we prioritize the high value area more than the structure completion. The structure is simply like a supporting confluence. It's not the main character, but it does help. So that's dollar yen, right? That's why it's better. But the play is very similar in the sense that we're just waiting for price to show us that it wants to reverse. So we're looking for that impulse break back down into range, followed by the first continuation, and we're trying to trade that follow through move. So our entry will look something along these lines. So let's see how this volatility plays out. And until then, I'm gonna eat my burger. So here we got their famous edition smash burger. Let's see if it's better than the Shake Shack out front. Ooh, you hear that? That's a nice start. That's super crispy. Let's see what's inside. Ooh, the damn!
Yeah!
All right, let's hit it. We're gonna go grab some lunch now. Just finished my morning forecast, and we do have a few opportunities for today as well as tomorrow, because today's only Thursday, right? And one of the things that I learned from Hidden Potential, the book that I'm currently reading, is that you need to be very mindful of your dopamine levels throughout the day. The reason for this is because the more dopamine you have, the more motivation or fuel you have to do the work that needs to be done. Put another way, if you're feeling good, you will do better in everything in life. So how do you maintain that high level? How do you start the day with that high level? Morning routines, meditations, gratitude journaling, all that kind of good stuff really works. And obviously, once you already have the ability to do so, travel like I am doing right now. If you're feeling like you're coming into a rut, right? Three fish fries, yeah? Yes. Now it's time to look at some books. Actually, this is a pretty nice place to just work. So if we just look at Euro Yen right here, we do have a point of liquidity serving as our value area. That price is currently retesting here with a really solid bullish engulfing currently forming on the daily. So on the H4, we do confirm that yes, we do have this really strong bullish engulfing close from the retest, and so now we're simply looking for lower time frame continuation right there. And this is what it looks like on the H1. Still nothing yet. We have to be more patient here. As we move into the 15-minute, we actually see not the best continuation. So let me show you this right here. This is an ascending formation, so we don't usually trade these, so I will have to wait a little bit more because I'm not gonna fuck around with this kind of formation. So Euro Yen has a very clear long bias. We just have to wait for our entry criteria to form. Whereas Aussie dollar, on the weekly chart, what do we see here, right? We see Aussie dollar being in a clear macro uptrend. So when something is this corrective, we want to try to be careful, right, when we're looking for entries in the lower time frames. So as we get into the daily here, we do see price retesting this key support level right here. This is our value area to look for long entries on the lower time frame. So on the 4-hour chart, what do we see? This is a very strong approach, right? Extremely impulsive. So we want to be patient in looking for our entry criteria, because usually these impulsive moves, they need time. They don't just reverse instantly. They need time to digest the move. And so now we're starting to see the early signs with this bullish candle forming, but we're still pretty far away. So I'm just gonna update you guys on what happens on these two pairs, Aussie dollar and Euro Yen. Been getting into this brand a lot lately, MLB. Amazing. Very nice shirts. Bagged 5 shirts. So far, I think I've already bought like 14 different shirts from COS and MLB combined. Pretty sure I've done enough shopping. The last stop we have for the day is finding some new keyboards. I haven't bought keyboards in a long time, and I used to be addicted to them. Literally keyboard heaven. I'm gonna be here for like a whole hour, but I can only get one. This is really nice. Damn, that's a really nice muted feel. Okay, this is option number 1. This is one of the cutest keyboards I've ever seen. The buttons are actually like rounded. Home sweet home. So right now we do have one relevant trade opportunity, which is in EURJPY. So let me break that down for you from the weekly chart as usual. Here we know that we are in a macro uptrend, right? So this downside reversal that happened here, it has already finished, it ended, as price has made this volume accumulation range and popped up from it. And so now our overall macro bias is for price to eventually complete all the way up here, right? Back to macro resistance. But remember, the weekly chart is simply for a bird's eye view perspective. It doesn't necessarily mean that this is the relevant bias to work with. And so for that reason, we want to go into the daily and see what price is actually telling us here. How is it moving up? Price has been moving up very correctively recently, right? This is not an impulsive move. This is a corrective move, which means it's very unsustainable. And eventually we will see moves like this, where price pushes down impulsively, which then creates opportunities for us to look for short plays during the overall uptrend, because the uptrend is moving very correctively like so. So we can actually find opportunities within the uptrend to go short. Now, as we move into the 4-hour chart, we actually do see what happens when price pushes above the relevant highs, right? So for example, here, we created a continuation structure that ultimately failed, right? And impulsively pushed down. And that's exactly what we're looking for here again. As price is breaking out of our relevant highs, we're looking for it to push down impulsively before eventually moving back up again in this overall corrective regime that we have going in EURJPY. And as we move into the H1 chart now, we also see further positive confluences as we see that price is also moving up in an ascending channel reversal structure in the 1-hour chart. So now we have more evidence that this current move up is unsustainable, and that's why we're looking for short moves. And as you can see, price has filled this wick right there, and it has since created a healthy origin impulse down right there. And so now we're looking for continuations in our first flag entries. We love trading early on in the move because that's where our edge is strongest, which is exactly where we are right now. And so as we move into the 15-minute chart here, we need price to push up one last time to create our continuation, and then our trade will look something along these lines. This is what our trade will look like. Very simple, very textbook trade. The only issue is we do have retail sales news printing in like 3 hours. So the timing will be odd, because if this forms at like 7:30, 1 hour before the news event, I just can't take this, right? Too dangerous, because there'll be too much volatility. It can take us out in our stop loss before moving in our direction. So then we'll have to wait, right? If this forms too close to the news event, we will simply wait for the news to print, and then we shall see what happens. I'll update you later.